The headline this week said unemployment went down. That sounds like good news, but 720,000 people just walked away from the job market, and that's the only reason the number dropped. Most people read the headline. Today, let's read the story underneath it. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of July 2nd, 2026. Let's start with jobs because that was the big story this week. The June jobs report came in soft. The economy added 57,000 jobs. The forecast was 110,000. So we landed at about half of what was expected. And it gets softer from there. The 2 months before were revised down by 74,000 jobs combined. That takes some of the shine off the strong reports we saw earlier this spring. Now, the unemployment rate. On the surface, it looked good. It fell from 4.3% to 4.2%. But here's what most people miss. The household survey showed 507,000 job losses. So how does the rate go down while jobs are being lost? Because 720,000 people left the workforce entirely. When more people stop looking for work than lose their jobs, the rate can fall for the wrong reasons. This was one of those times. One more sign worth noting. Almost all of the job growth came from private education and health services. Those jobs are usually budgeted far in advance, so they hold steady in good times and bad. Leisure and hospitality actually lost 61,000 jobs. Take out education and health, and the rest of the economy was slightly negative. So what does a soft jobs report mean for you? It matters because weak jobs data usually helps bonds and mortgage rates follow bonds. This week was tug of war. The end of the quarter brought some choppy trading that pushed rates up. Then the soft jobs report gave bonds a little relief. Here's the number to watch. The 10-year Treasury closed at 4.48%. A week ago, it was 4.37%. Rates jumped earlier in the week on end-of-quarter trading, then pulled back after the soft jobs report. Mortgage rates recovered almost half of what they had lost. Here are this week's average mortgage rates. The 30-year conventional is 6.60%. The 30-year jumbo, 6.77%. The 30-year FHA is 6.17%. And the 30-year VA is 6.19%. These are national averages from Mortgage News Daily, not an offer to lend. Rates ended the week a little higher, but here's the good news. They are still below where they were in early June and mid-May. What about the Fed? And where do rates go from here? There is a real debate going on. One voting member still wants to raise rates, and the market sees a chance of a hike later this year. But two things are pushing the other way. Oil dropped under $68 a barrel, and the national average for a gallon of gasoline is down to $3.83. Lower energy costs help cool inflation. The new Fed chair also appears more measured. He seems focused on the softening job market and on how new technology may actually hold prices down over time. Here's a simple outlook. Expect the 10-year Treasury to stay in a range of about 4.25% to 4.55% in the near term. Not a straight line lower, but not running away higher either. Contained. And remember, strategy beats rate always. The people who win are the ones with a plan, not the ones waiting for a perfect number. Now a word, if your tax returns do not tell your whole story. Maybe you are self-employed. Maybe you own a rental property or run a small business. On paper, you can look weaker than you really are. We have a selection of loan programs built exactly that situation. This week, we're highlighting the DSCR loan. With a DSCR loan, the property and the income it generates can help you qualify. Your tax return is not the whole story. Visit rsrlinks.com/DSCR. That's rsrlinks.com/DSCR for the details. That ties right into our featured articles this week. You'll find these below the video or to the side of this update, depending on the device you're using. First, a loan is not good or bad. It's a tool. Most people use it wrong. Next, here's what nobody tells you about that perfect beach rental. Next, a new home saves you $25,000 in 10 years. The move-in costs erase it. Here's the math. And finally, you track your coffee order better than your budget. Here's the math. There are more on the page as well. One more free resource for you. KeySteps is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps to set it up for your household. A quick look at next week. On Monday, we get the ISM Services Report, a broad read on the economy. On Wednesday, the Fed releases the minutes from its last meeting, which should tell us more about the rate debate. And on Thursday, we get existing home sales, a good gauge of the housing market if you're thinking about buying or selling. It is a lighter week because of the holiday, but those three are worth watching. That's your weekend update. This is the July 4th weekend, so wishing everybody a happy and safe 4th of July and a happy 250th year for our country. We appreciate you listening, and we'll speak to you again next week.